Business here.
I think there was an original point in there someplace that was sort of business, and ended up getting into a little bit of what, you know, Santa Mike said something about about food banks and just being overloaded. To start off the conversation, I guess I was talking about one of the questions that I had, Ira, which is about what Powell meant when he was talking the other day about a societal-wide commitment to full employment. What the hell does that mean?
I have no idea, but wait, hold on. Let me go get my coffee and I'll keep talking.
All right. So when I brought that up to Mike, then, you know, he started talking about food banks because of his work at Santa Mike. He knows what's going on with food banks a lot more than I do. And that just ended, you know, kind of went into an anecdote about Jen and I being on food stamps and for a little bit while I was rebuilding my business. I actually tried to refund them. They wouldn't take it.
Those are tough days to go through, and once you get through them, you appreciate what you have, and you know, you respect it a lot more, I think.
No doubt. And really, Mike, is as good of a trader as I was on the floor, I'm a much better trader now because of that experience, because of that time.
I agree. I believe that.
And Jen and I, our relationship, I couldn't imagine having a better relationship with Jen. And the reason being is because, you know, we made it through some really, really rough times.
Yeah, you're raising a family and kids and a wife, and they're all sticking together and making it work. That's a team effort. That's a beautiful thing.
Gosh, it was. Gosh, it was. And so like I said, I'm not ashamed to admit it, but you know, I'm proud of the fact that we pulled together and figured it out. And I took steps every single day. I got up every morning. To move forward and try to figure it out. Do I trade?
Okay.
Hey, all right.
All right, let's get this. What was that question there?
Well, it wasn't so much a question as it was, I guess, hey, can you go on camera, Ira?
Oh, you want me on camera? Sure.
Yeah, if you don't mind. If you can.
Yeah,
if not, don't worry about it.
You know, I have a much better face for radio, but that's okay. Hello.
All right. So
how about that?
Let me see. It's not so much a question as it is just kind of an observation, or I know it's a question. What the hell does he mean by that?
About full employment?
Yeah.
Well, you know, Pax, we've talked about this, and it's driving me crazy right now. Truly driving me crazy, because I take him at his word, but the focus is totally right now on, wait, hold on again. I want to get, hold on one second. I can keep talking, but you might lose my video. Can you still see me?
Yeah. I see you perfect. You look great.
Okay. All right, fine. Wait, I'm gonna go answer some of this question, but I got to get a piece of data first. Okay.
I also have a question about Zoltan Pozar too. You know,
you saw Alex wrote a beautiful piece.
Yes.
Got
very well done.
Yeah, it really was. It's really nice to see her back in the saddle.
It is. Which, by the way, I just remember we had brought that up last week. I don't know what the hell made me think of it.
Okay, hold on a second. Okay. So there's actually an interesting piece too in the FT today discussing this, because there's let me see who wrote it. I have to go back and look at it. Come on. Oh, well, Phil Stevens, who I can't stand, wrote a good piece, Why Economists Keep Getting the Policies Wrong, which is worth a read for anybody who gets it. But there's another piece that is really good, because the guy talks about Okay. I believe that Powell means it, especially now that he's got Janet Yellen. So you're going to see a working relationship between the Treasury and the Fed, which has been my argument for now weeks and weeks. They're and Janet Yellen is not Mnuchin. Janet Yellen totally overpowers Powell in the international world. Here's the piece. I'm sorry, it was from yesterday, and it was by a guy, Ian Hartnett. I really don't know him. Investors also need to act big as Yellen signals regime change. It's worth a read.
Yes,
I
I saw that too.
Yeah, good article.
Oh, hey, by the way, flip that camera up a little bit. I can see your chin.
Oh, I'm sorry.
There you go.
Okay. So here's the deal. If they're so tied together, they've both committed to full employment, right?
Mm-hmm.
Now, I can't define for you what full employment is, but either can the Fed, because they've moved the goalpost so many times. So let's go back exactly a year. Unemployment was at 3.5%. Right?
Mm-hmm.
Now, Jerome Powell keeps saying it. Real unemployment by the Fed's measures is 10%. That's Powell's. That's not me saying it. That's not you saying it. That's Powell's words, but everybody doesn't want to pay attention to it. So if real unemployment is 10%, how long are they going to have to hold rates, to get to their levels, right? Because they have a dual mandate. Now, I'm going to say it again because we keep seeing it. The most powerful force right now in the markets, because it's driven by the algos, and the algos drive so much of the day-to-day. Mike Stern, pay attention to this because this is the world you're walking into, where they drive the world, right? They're the one. So when the 30-year bond, and you can put up a chart for everybody if you want, Pax, you can see the futures, which means that yields are going higher. Everything revolves around it.
Mm-hmm.
I'm looking at, I have right now in front of me, this morning, the US 210 yield curve, which has been very important for anybody who follows my work for 10, 11.
Yes.
And of course, the 530, which is more speculative trade. But the 210 for a lot of institutions is the key. And we're out to 120 on that, which is a huge move. It's a huge move. So even the 10-year yield is 1.31 this morning, okay? Now, the Fed's measure of inflation is still about 1.6. So you're still running, if you bought a 10-year and inflation stayed at this level for 10 years, you'd be losing about 30 basis points in yield every year for the next 10 years. So if prices went up, but if they went up higher, you'd be losing more. But it's the real yields that matter. So 10 years are still, but relative to everything else, the United States is pretty rich, which is why you've gotten a little bounce in the dollar here. Not a lot of bounce, by the way, a little. Because, and I'm taking a look, you've seen yields in Europe, of course, too. The Bund the Bund yields have gone from negative 60 in the very short period here to negative 33 this morning. Hooray! That's what we have to cheer for. But this is the world in which we live in. So the algos are looking at it and go, "Whoa, yields are higher. U.S. assets are more attractive," and so they come to buy the dollar in the short term, and then they sell off other assets. So gold has really struggled here, as it should, because that's what the algos are set up to do. Well, what do you want to own gold for? Yields, and the 30-year actually returning a real yield. But we've never, again, seen this happening off of zero interest rates.
Mm-hmm.
I'm still looking at the Fed, February, a year from now, Fed funds futures are still pricing 10 basis points of return. So for all this movement, of course, that's why the curve is steepening, because you're not getting any movement on the short end. The 2-year note in the US is still 12 basis points. So if you're buying anything less than 30-year, or let's say 20-year, you are dealing with negative real yields. And on the short, anything less than 5 years or is significantly negative. I mean, I think the 5-year note is yielding about 50 basis points. So that's 110 basis, so this is all going on. Why? Because the Fed is primarily buying anything from overnight to 5 years out. That's where the Fed has been doing the primary amount of their asset purchases, except of course for mortgage-backed securities, which have a longer duration. They buy less of it, but the housing market is strong. So there's a lot of mortgages being written right now. So it's not having, it is having a pretty good impact on that end, because mortgage rates are still at historic lows, even as we've gotten this move up on the, I know this is a lot to digest. So my concern is, and that was that Ian, whatever his last name was.
Ian Jones.
The Fed, and put these words into your everyday mindset. Fed and the Treasury have to concoct a plan to financially repress all investors, in my belief. Because are they going to let this curve steepen out 200 basis points, which would, so if the 2-year stayed here, that means that the 10-year would be at about 225. Are they going to allow that? Now, when I say are they going to allow it, the market forces right now are pushing. But if we know one thing about all central banks, they cannot allow market forces to set prices, because that's what this has been about for the last 12 years. So, as I used to discuss with Santelli ad nauseum, that the market signals are broken. Right now, the market signals are starting to function. What will the Fed allow it? And again, go back, and this is not unprecedented. The Fed in 1946 and 1951, with the Treasury as their partner, embarked on financial repression by holding the long end of the curve down. And even though inflation ran 6, 7, 8%, I don't think that yields went above 2.25% to 2.5% on the longer end of the debt. Are we going to see this? I think yes. When? Don't know. It could be tomorrow. But that would take an active move by the Fed to announce, and I don't think there's going to be an announcement, so it would have to be action on yield curve control, which would be reaching into their policy toolkit, as they would say, and move to buy all 10, 30-year and leave the short end alone. That's what would happen. What was called in 1946 to 1951 Operation Twist, because they twisted the curve by the decisions that they made. What's going to be the break point that's going to force them to instigate that? I don't know. Again, I had that long conversation with Louis Gavay, I think on one of the better podcasts. And he had moved from 2% to where he thought that 95 to 100 basis points would be, because he thought they started embarking on it. But, I can't say that at this point. But if they're not, there's a duality here. There are those who think the Fed is very happy that long rates are going up because it says to them that they've been successful. This is the argument on Wall Street, or that Wall Street's trying to make. Don't worry about the long end for stock markets, because it's telling you that the economy is going to come roaring back much bigger, and the Fed is really appreciative of that. But I'm not in that camp, because you can accept that, because then that's a heads and tails you lose. The Fed can never be wrong here. And my standpoint is, going back to your question, Pax, is they're going to fight for full employment. If they're going to fight for full employment, they cannot let interest rates get too far ahead of them, because it will, first of all, a lot of businesses that are hanging on by a thread will have to pay higher borrowing costs without economic performance yet, justifying them going out and investing more in any type of capital expenditures or hiring more people. So there's a lot of things on the come here. And I agree with you that the full employment is the most important. They keep saying it. Nobody wants to believe them. I believe them. Because again, they've shown me their hand, which is their concern. And again, I'm not locking up with the moral argument. Jerome Powell keeps saying he wants minority employment to get back to the levels of February 2020. And let's go back a little farther, because the last time we saw bond prices, okay, at these, and this will help make it. So let me go. I was doing this work yesterday. Okay, let's go back here. Oh, so when the curve was out at these levels, okay, this was, we go back to November of 2018. And that was when we were in the middle of what Druckenmiller so beautifully called the double shotgun that the Fed was embarking upon, which was raising rates on the short end, curtailing and selling off and shrinking the balance sheet, which we saw how dramatically it hit the stock market. And then he pivoted dramatically 2 months later, where he said, well, we're not raising rates anymore. And they stopped shrinking the balance sheet. And then after that, they were cutting rates even before the onset of COVID, because they got a little worried that they got too far ahead of themselves. But these situations, but the unemployment rate at that same time, when they pivoted away, it was 3.7%. We're at 6.3 on the headline numbers, but the Fed says 10%. So can they keep allowing, my question is, can they keep allowing it? The market is testing them, and the market will, and good for the market, because they should push them and test them and find out just what their break point is going to be. Now, the first step they're going to do is try to jawbone it. They won't, because they got away with that last year, again, when they did some buying when the corporate bond market was in trouble, and all bond markets back in March and April, and they were running crazy because the dealers couldn't take all the stuff that was being thrown out there, and corporate bonds, people were scared, because if you're going into an absolute downturn, who wanted to own corporate debt? So the Fed had to come in and actually buy some, but the Fed has patted themselves on the back because they didn't really have to buy that much. Just jawboning it and talking about what they were going to do seemed to move the market dramatically enough that they didn't have to expend a lot of capital to do it. So I think they're going to start jawboning at some point, although some of the regional presidents are talking about that this is a good thing. So Powell better get his people in under wraps here. And it's just what we're looking at. But if you believe that their goal is full employment, no matter how it's defined, you better be prepared to look for a lot of action here. Jawboning, actual action. And here's my point. If they actually announce, if this market pushes hard enough and the Fed gets more than a little nervous, and they announce some further out yield curve control, that's when I sell the dollar in an aggressive fashion and buy gold.
I,
Now, and I also think equities will go, that'll be the next and probably final leg up in the equity market. So I'll trade all day long using the algos give me the pivot and give you the action. Great. So I keep paying attention to that, and I will continue to pay attention to that. But it's a trade. I am not in an investable position right now until I see that. And if I don't see it, well, I'm wrong and I'll adjust accordingly. But even Mohammed Al-Arian says, if long rates go up high and fast enough, the equity market could really shake, rattle, and roll here.
so if the Fed announces that they're instituting yield curve control, so the dollar will tank, gold will finally start to catch a bid, and we'll see the final leg up in equities.
I think so. That's
Yeah.
that's the way that I see this. Now, I threw a lot of stuff out there. It's really all the same, and I it's just not an easy. This is difficult. I'm telling you, this is difficult. In every way, shape, or form, this is difficult. And but am I making a bet on it yet? No, I'm just trading what I see.
But Ira, that would be on an announcement, the Fed announcing it. It wouldn't be on the market adjusting that way to continue to adjust, right?
Oh no, if the market continues to push yields higher,
Yeah,
it will. I just don't know what their break point's going to be.
I guess that was what I'm trying to get at.
I have no idea. Now we're also watching rates go up in Europe, right?
Yes.
But we know that, see, Europe is a different element here. Because as I synthetically create a euro bond, right? They buy some Italian, they buy some, based on, you can do it on capital keys or you can do, but as those yields have rise, more investors come looking for a way to create their own basket, which is basically what a euro bond would be, and they buy a little of that and they make it work. How high, and you could see it's the U.S. It is the U.S. that's dragging rates higher.
How does this work, with people fighting for a $15 minimum wage?
Oh, great question. Very good.
That is a great question, Mike. And the answer is nobody knows. Nobody knows. Now, I talked to my beloved Sophia, has a lot of links into that business, and she says small businesses, there's no way they can make that. There's no way. It's a killer, and it's the wrong time because they're suffering now. But that actually makes the point of what I'm trying to make about full employment. This is an administration, and again, I'm not making a judgment call here. In a very moral sense, I agree with them totally. In an economic sense, at this time, it may not be the right policy. They're jumping to get ahead of this because that's the campaign that they ran on. And so, but when I talk to people who are small business owners or involved in small business, it'll be a really rough time. Now you could say they're always crying. Yeah, but sometimes their tears are real and sometimes they're just knee jerk, but Sophia says this will hurt. But what it may lead to, and I'm really looking at the restaurant business and anything associated because it needs to change. It's the way they pay, it's ridiculous. And I look at, because my daughter's, she's a top level chef. And when all the servers make twice as much as the top level chefs working in the kitchen, it's a business that needs to change. So I said, well,
yeah.
I said, if they're going to pay them $15, that means that, I'm just talking about the restaurant business here. That means that the owners, proprietors, are going to have to take a piece of the tips.
Uh-huh.
there's no way around it. So,
Wait, Ira, can you say that again? The owners are gonna have to take a peek into the tips?
yep,
Jesus.
I don't see any other way around it. So therefore, it becomes a classic money illusion in that business.
Hmm.
Because you're going to give with one hand and take with the other.
Mhm.
I just don't, they won't be able to eat it. Or they'll just, in Europe, where there really is not much tipping like there is in the United States, they build the tips into the price of them. That's the price you see. So food costs are higher when you go out to eat.
Ira,
Yes.
so on this subject that, hopefully you don't mind me interrupting, that
No, it's for.
the Economist was doing some processing on the $15 an hour. And they stated because so many states and cities have raised their minimum wage that really within, I think it was 2023 or 2024, that the average wage in the United States is going, minimum wage is going to be like $13.50 to begin with,
Mhm.
without the federal government doing anything. And one of the announcements that, Walmart's getting whacked today is that Walmart is doing a across the board increase in pay where their minimum wage is going to be 13 to 17 based upon location. And so they're pumping it up, but it's like, if the politicians do nothing in Washington, it's like we're going to get close there anyway.
Yeah, again, so who's that, Brian? Who's,
No, that's Jeff.
okay, so
Jeff.
yeah. These are, and Mike asked the question, and it's a very good question, but it will, first of all, well, let's step back. Will the Fed see it? The most important for us is, will the Fed see it because average hourly earnings, of course, will jump. So will the Fed see that as inflationary? I will dissuade you of that right now because they'll call it transitory. You can bet on it.
Yeah.
Well, this is a one-off that'll work its way through the system and we're not worried about it. So I don't think the impact will be there, even though you'll see a boost, and you've seen some already, the average hourly earnings. And of course, the classic argument is that it's going to hurt those who are intended to be helped the most because they're just not going to be hired, and people will make do with less. And the newest part of the discussion is, McDonald's et al. Will go to automated, everything will be automated as much as it possibly can. And there'll be less people working. These
Okay.
are long-held arguments that have not necessarily played out, but I'm not going to lock up with them at this moment.
Is that what Powell means when he's asking for a societal commitment, a society-wide commitment to full employment?
Well, that's a good question. I don't know. Is he saying, look, that means we're going to stay lower for longer. You may have to bear some inflation. I could read it that way. Okay. Let me tell you again, and Peter Bookvar has argued over and over and over again that when prices go up, the people who are hurt most are the people at the lower end anyway, because the percentage for rents and costs take a greater proportion of their earnings than it does for wealthy people. Oh, let me put you on hold for a minute.
Yeah, sure.
Hello. Hi, Leo. Yes, I'm sorry.
This is a really important discussion. Really important discussion. And Jet, that was a great follow-up question to Mike.
I thought the restaurant business, don't the waitresses all chip in to pay the busboys?
Yeah.
So
Yeah, and their average hourly earnings are always, they make a lot less than minimum wage, depending on where you're working. Right. I think because of the because of the tips. My first job was as a busboy in 8th grade. I worked at a Greek restaurant in a building that actually Ira's father owned on 53rd and Pulaski. Believe it or not. Anyway, that job was one of the roughest jobs I ever had. I was in 8th grade, but I remember getting paid. I was paid $2 an hour, and I think the minimum wage, that was in 1982, and the minimum wage I think was $3 or $4 an hour. I got paid $2 an hour, but I got tipped out by the waitresses at the end of the night. The years that I bartended in between that, when I was rebuilding my career again, I bartended or whatever, to bring in some extra cash, it was always the same way. How in the gig economy, in the U.S. economy that is now centered around service, the service industry, how is this going to play out?
Well, every time you pick up a paper now, you see here Biden wants reparations for the Black community now, and we're all getting $1,400 checks, and somebody's going to get, when does the giveaway stop, and when are we going to pay for this?
That's a great question. Again, too, there was Thomas Sowell. Do you know who Thomas Sowell is? He's a conservative economist. He was a disciple of Milton Friedman. He's an African American. He's a Black guy from Harlem. Super fascinating man, very brilliant, who took a lot of flack in the 70s, 80s, and 90s in talking about the how liberal America, or the welfare state, has held back the Black community, and the United States in general. Then you go back and think about just our kids, or your grandkids, that there's, everybody gets a trophy. Everybody gets something. Everybody's entitled to something. And if you're not entitled to something, then that creates an entirely different victim, sort of a victim society. And everybody's a victim of somebody else. Well, my kid didn't get a trophy. And so, okay, well, my kid didn't get a trophy, so she's got to work harder. That produces greatness. The incentive to work, to get off welfare. There was a documentary I was watching on Thomas Sowell. I'm new to Thomas Sowell, so I don't know much about him. But watching a documentary where it was a Milton Friedman documentary, where do you remember when Friedman used to have those little shows on PBS? I was rewatching one of those with Sowell in it. They examined the welfare system in the UK and the welfare system in the US. They used an African American family in New York whose father, the husband, worked as an orderly at Harlem Hospital, and they had a daughter who needed some sort of special medical equipment, but he made just a little bit too much money to qualify for public aid. But he refused to give up his job. He wanted to work. He wanted that incentive to do better, to be better. I don't know.
A question, I don't get it when you see some of these companies, when you see some of these locals, and they're given opportunity to have plumbers and electricians who make a very good living once they become a plumber or electrician.
Sure.
You may have to put in 15 or 18 months or whatever as an apprentice, but I don't know why these schools aren't filled.
I don't either. My own son.
I don't get it.
My own son Danny, who was in here a little bit ago, right before you came in, he's out in Vail, Colorado. He just went skiing. He lives out there. That's what he does. He smokes weed and skis or snowboards. Anyway, I wanted to get him into I wanted him to go into the electricians union. He went to University of Alabama for a year, didn't really like it. He was going to join the military, but found out that he's legally deaf. That broke his heart. So Danny, become an electrician. After the first 6 months, and when you go to the electrician school in you begin your apprenticeship, the only time that you don't earn money is your first 6 months. Now, then they pay you beginning at $18 an hour, then you go up to, I think, half the scale, and scale is $48 an hour. You go up to whatever that is, $24 an hour within your second 6 months. So within your first year, they're paying you $24 an hour to go to school and to
Wow.
work, and to do, and then 6 months in the classroom, 6 months out in the field with some company, then back into the classroom, they're paying you. Then, once I think the apprenticeship is 3 or 4 years. Once you're done with the apprenticeship, it's $48 an hour scale. Why those schools are not filled, I have no idea. No idea,
I don't either. I don't get it. There's something wrong somewhere because I don't get it.
And I've got my own set out there.
Thousands of people you see marching at McDonald's for a half a dollar raise, from $7. And you can make, like you say, you make $24 an hour or $24, whatever, going to the school to become a plumber, an electrician, a mechanic. There's so many of these opportunities out there. I don't get it.
I talked to a friend of mine, Sam Farina. Sam clerked for me for a bit in the NASDAQ and traded. He also traded for me and Sammy Amably for a bit, on and off. Sometimes Sammy backed him, sometimes I did. He's a plumber. Rose Plumbing in Melrose Park. He's going to Texas. He called me yesterday on his way down to Texas. Texas has got everybody in Texas got busted pipes, or at least everybody in Texas knows somebody that's got busted pipes.
Right.
He doesn't think he'll be home for the next 6 months. He's going to go down there and
good for him.
Constant overtime. Now this guy's my age. He's 50 years old. He's a 51-year-old man. He's not 23, 30, or 35 years old anymore.
Yeah.
Unbelievable. But you're absolutely right. And it crosses all color lines. Everybody is a victim. Everybody doesn't. Nobody wants to get out and work. Nobody wants to get out and do the things that I did, that you did, that all of us did. I love that conversation, Mike. I love the conversation we had last week when you were talking about how you got your start on the floor when it was still eggs and butter. And you talked about how Fisher had just thrown his deck at you and said, "Here, figure it out." Well, you did.
Yeah.
It was a great Wags, and I don't know if you remember John Wagner. He's in here at Wags. His badge was Wags. Wags and I were talking about that too with Jen. Is there was a really good filter. This is not the kind of person that's going to be good at this business. So they're going to find their way out. You either sunk or you didn't. You either swam or you didn't. There was no time for victimhood.
Well, there was no time for feeling sorry for the losers and what have you. And just like you say, everybody got a trophy. My kids wanted to quit sports, and they did for a while when everybody got a trophy. Oh. My kids asked me, "Dad, what are we playing for? I thought we were playing to win so you get a trophy." Yeah. But every kid got one. I thought it was a joke.
Marguerite, my daughter, me and Jen's middle daughter, Maggie, is 14 years old. And she's a competitive Irish dancer. Her first Midwestern Oireachtas, which is the Midwestern championships, she didn't recall. Like there's 120 kids dancing and then the top 40 recall. She didn't recall her first year, and all of her friends did. That broke her heart, and it broke my heart to see her so brokenhearted. Oh my God!
Right.
Bawling her eyes out. 10 years old, but 2 years later, she came in second in the All Ireland competition. An American girl coming in second in Ireland. That doesn't happen.
Wow.
She worked her ass off. She created something out of nothing.
She let a bad moment push her harder.
Yes.
That's what she is inside. You see, she's a real person. The ones that break down from not getting a trophy, they don't have a chance in life.
That's victims. Back to victims.
Yeah.
Pedro, what were you going to say?
Oh, that was me. But
Adam.
Yeah. No, I mean, I think it goes back to the whole thing of it became everybody has to go to college. You have to go to college.
Yeah.
And like that became the norm. Is now after high school, you go to college and that's what you do. Now what you get your degree in and do after that, nobody really talks about. And I think that's where there's a big disparity, because you're getting all these liberal arts degrees that don't really do anything, as opposed to STEM or, or just the trades and stuff. So
Which
Yeah,
that's
I
a great
totally
point.
agree.
What's that?
Go ahead,
The
Mike. I'm
fact
sorry.
that, you know, I'm 75, and I remember, and I had trouble getting out of high school because I had some issues, but everybody told me, Mike, don't go down to the exchange. You got to get an education first.
Yeah.
Well, I got more of an education on the floor, you know, than I would have in any college I would have ever attended.
Oh, amen.
And it's just so true. It just, and now, you know, to become a policeman, you need a college education.
Yeah. Yeah.
And
like
I
that.
think firemen are pushing that too, where you need a college education to become, I don't know why. You know, I don't get that, but
Because it's free.
I guess everything's going to be free pretty soon.
That's the shocking bit. I mean, I just knew too many kids who went to college and took out exorbitant amounts of debt. I went to a liberal arts school, and I was planning on being an orthodontist or going into business. Ended up going into business, but I knew too many kids who were getting religious studies degrees, history degrees, and they weren't planning on going to law school or anything else after that. And I'm thinking to myself, holy cow, how are you guys affording to do this? This is insane to me. And then, yeah, I guarantee you can go to any restaurant and ask a waiter, waitress, hostess, whatever, you know, do you have a college degree? And I guarantee you a whole bunch of them do. And then because of
Yeah.
it, have, you know, 30 to maybe $100,000 in debt, depending on what school they went to. It's nuts.
Well,
All financed
years
by the
ago,
government.
parents believed if you had a college education, you were a cinch to make it.
Yeah. What a
I
joke
mean,
that-
that's from my generation. They thought.
Are you
were
guys
being
ready
a
for me again? Hello?
Yes.
Yeah, we're good,
We're always
Ira.
ready for you.
All right, so where did the conversation go to? I'm sorry, Mike, I was back in the kitchen at home. Well, that's who called on that, and I had to take the call.
Oh, cool.
Yeah, we're working on something, so something. All right. What world problems were resolved while I was away?
None. We just created more.
Oh, well, then I'm in the right place.
We were talking about, you know, kind of the welfare state that kind of created the victim mentality. Everybody gets a trophy, which cuts back on the American, you know, the American exceptionalism and American greatness. People just pressing forward. You fail, you get up, you move forward, you continue on.
Yeah,
People are just being rewarded for bad behavior.
that ship sailed long ago.
Mhm.
And now it's the policy. And, you know, again, that's what people voted for. As much as you voted, because, you know, and again, you know, we don't go into political discussions here because of your disdain for Donald Trump. That's fine. But
Right.
they did like what was on the offer here. And you know, I'll stress over and over again that he is the minister of social justice, unless you think he's an absolute liar and you just throw this out there because, you know, he wants to get invited to more parties. You know, I'm not going there. I take him at his word. He is very concerned about minority unemployment. And again, I'll say it again. Biden uses the phrase through no fault of their own. It was started by Jerome Powell when he
Yes.
talked about that these people lost their jobs. Again, this is the operative phrase. Don't diminish it. Through no fault of their own. Through no fault of their own. Biden said it. And a week and a half ago on the Sunday morning talk shows when they had Yellen on, I know I'm quoting here because I have the piece. She uses the phrase. I can tell you the context here. I got it right here. So I think we've discussed it here. But she was on CNN, and here's the quote in the article. This is from February 7th in the FT. We already have too many small businesses that are closing, she said. We have people suffering, particularly low-wage workers and minorities, through absolutely no fault of their own. Now, either that phrase is vacuous and has no meaning and they just throw it out, or they mean it. And through no fault of their own, policy has to be that much more aggressive to overcome the no fault of their own. This didn't happen to them because of decisions they made. The government decided to shut down or negatively impact a lot of businesses through the way that we were going to deal with the COVID crisis. And so therefore these people got laid off and the losses. So it wasn't for lack of education. It wasn't for lack of hard work. It was through no fault of their own. So in order to bring and substantiate that, you're going to have to bring unemployment down to 3.5% for all these people to get back in the job market. That's people who work on cruise ships, who work on airlines. They're people who carry your luggage at the airport. It's going to take a lot. So do you, if you thought that the rise in long-term rates was going to inhibit that, what's your response? I can't get now, but because this is what's so at what point does the market push them where they have to absolutely make a statement?
What earlier when you had mentioned, I wanted to ask you or clarify something when you were talking about the Fed instituting yield curve control as kind of a final tool, one of the biggest and final tools. What's after that? And because another thing that you said was, that'll be the last leg up in equities. Okay, if that's what kind of tools? I don't like that expression, the tools in their toolbox, but what do they have left? Yield curve control, then what?
They say they have more. Now, I will tell you this. I have it here. Am I on video?
Yes.
Okay. Let me hold it. Tell me if you can see what this says. You see that?
Now I can see the writing. I can't read it.
Okay. You can see. This is written for me on July 21st, 2004 by one Erin Perzoff when she was an intern, her second year of interning for me. The title of it is An Investigation of the Relationship Between Changes in the Yield Curve and the Performance of Stock Indices. Okay?
Boy, I'd like to read that.
Erin wrote this and she compares them all across the globe. This is a global macro analysis. And believe me, I had a lot of good interns. She was the best. And she really made me stop and think a lot of things. But so we looked at this and I'll tell you this. Let me see if I can get to like a summary page. So the relationship, what some people think, is not quite what you want to believe. So because historically, and this is important, what I'm going to tell you. Historically, and there are people out there talking about it now, but they're looking at it in a different way than I am. Because historically, when the yield curve steepened as dramatically as it has, it would usually and typically elicit a response from the central bank, in this case here, the Fed, that they're so far behind the curve, meaning growth is so robust that they have to alleviate the up price pressure that they raise short-term interest rates, right?
Yeah.
That's the class, which is why you get the classic business cycle for all of you who went to business school. That's the classic underpinning of the business cycle. Growth develops, growth is going on, everybody's investing. The Fed wants to slow it down. Remember, the operative phrase from McChesney Martin was the role of the bank is to take away the punch bowl just when the party's getting started, right? That's how it's colloquially said. But so that's what created the business cycle. We're going to raise rates. But as long as the market determined that the central bank was behind the curve still, so even because think about what it took Paul Volcker to wring out inflation, okay, from the system. He had to invert the curve to 6 or 7 or 8%. That's 800 basis points inversion where the short end was yielding that much more than the long end. And that's what caused a massive amount of job losses to slow down the economy. But his job was to wring inflation out of the system. Now hold that in your hat because that becomes important where we're going here. But that's if your job is fighting inflation. But if your job is securing maximum employment, especially through no fault of their own, you're going to be reticent to raise rates. I'll call you back. But that's what the Fed would typically do. But they can't raise rates here. They can't. So until the market pushes them, that's why I think you have to get to the yield curve control. Because again, I take Powell and Yellen, and they're on the same track here by saying that the real unemployment rate is 10%. You know, but Wall Street's looking at the high level of savings and that vaccines are coming and everything's going to unlock. Going to be loaded onto cruise ships. Airlines are hiring all these people back. Now they may be right, but the Fed is still going to be on hold until the Fed actually sees that it's really taking place. But you're going to have to get down to those unemployment levels that you saw in pre-COVID. And I just don't see any way around it. I just don't see any way around it. And that's what I keep coming back to. Now, you can't trade that view because you lose a lot of money on a daily basis. It's just wrong because the algos have this pinned up here pretty good, by the way. They've got this pinned because they're looking at 10 and 30 years, and you can't blame them because the market wants to accept that. Hey, rates are raising. That's going to force, and that's what Wall Street believes. That's going to force the Fed's hand. My view is the way it's going to force the Fed's hand is what you said, Matt, is to go into their toolbox and to pull out yield curve control. Because if you're worried more about unemployment, you have to go to yield curve control. If you're more worried about the price pressures from inflation, then you start raising short-term rates. But that's the dichotomy that we are facing right now. And this is where the market is trying to figure it out. It's that dichotomy. If they're inflation fighters, look for short-term rates to rise. If they're seeking unemployment, lower unemployment to pre-COVID levels, no, then I think the market's going to force them into yield curve control. I mean, does that make sense?
Yes. Perfect sense.
And again, let me say this. Steepening curves, as you see, are not bearish to market because look what's happened. Look, financial institutions are rising dramatically because they think that, banks will make a lot more money with the steepening curve because they can take your deposits and pay you nothing or 5 basis points and invest it in 10 and 30 year, and buy, put out loan price to those and make a lot more money. So rightfully, all you do is have to put a chart up of JP Morgan, Goldman Sachs. It's having the impact. So that view is deemed correct.
I've been trying to figure out why gold hasn't been catching a bid and following the strength in palladium and silver in some sort of fashion. In fact, it's just continually selling off. So in the event of the Fed fighting inflation and raising short-term rates, gold would continue to go higher, right? Gold would rally in that event.
If the Fed continues fighting unemployment?
Yeah, if the Fed, in the scenario that in the examples that we were just talking about,
right? If
the Fed was fighting inflation, I'm thinking back to Volcker time, then gold would rally.
No, if they're fighting inflation, no.
No, okay.
People are looking at the real return on yields. Again, this is very important because we've never been at the zero interest rate, okay?
Yes.
Usually we've been at about, I would say historically 4%, 4.5% on the overnight rate. So when you started raising them, so if inflation was 5% and the interest rate was already 4.5%, so you were negative by 50 basis points. If the Fed raised to 6, you now had a positive real yield, which is always hampers the gold market.
All right.
And again,
Hi, do you think Bitcoins are holding back the gold market a little bit?
yes. Yeah, because people have found them to be somewhat of an alternative, and they like that. Yeah, and Mike, I talked about this before. The classic guys, the titans of the world that I love and live in, the global macro world, guys like Tudor Jones, Druckenmiller, Kovner. Mike, these are the guys we knew and saw. They were momentum traders.
Uh-huh,
Like Rich Dennis. So when he got that
right,
in his mouth, right, and they were on a play,
yeah,
they would
Push.
push. But with the rise of algorithms and this arithmetic, methodical trading, I think a lot of those guys, my types of classic traders, based on fundamentals, and then would use the technicals to determine the risk factors, they were getting the shit beat out of them.
Yeah.
Where the fundamentals just couldn't take hold because the algos were totally mathematically and looking at numbers, and their numbers of driving market forces were so big that they would get stopped out because they would try to get on a momentum, but there was no momentum because it was just pure mathematically oriented.
mm-hmm.
And they got beat up for years. And I know I was one of them. I had to readjust and get a lot more patient in the way that I approach markets. I used to argue with our dear friend Lenny, you can't trade that way anymore. Him and I had that discussion for, he died in 15, for 7 years, 8 years. Because and every time he would be getting stopped out and I'd be laughing. I said, the only good thing is you're trading 10 lots rather than 100 lots. So and you keep coming back to it. And George would say, tell him to stop trading. I said, I'm trying to teach him, not because he's not going to stop. But he couldn't have the patience because when he saw it, I got to get on it.
Yeah,
Because he would see the underlying fundamentals and we would argue about it. I said, wait, so I'd be buying when he was selling.
okay.
And it used to drive him crazy. I said, you're not patient enough. I can't do it that way. I go, listen to me. So we would have, but I think that's going on. Bitcoin, these guys are now in charge of the market because the algos are not there because they don't have enough data on it to really build their mathematical models. And the banks are not in control of it because they don't have it either. They get to push and they take profits and they'll push. So they're loving this. And now that the world, that's the way I see it, Mike. So players like that, they've got billions of money. I still question, again, because if I was running some of these funds, what was going on 2 weeks ago with SLV, and I'm not sure that we're done with this, by the way, because silver deliveries start a week from tomorrow, I believe, first notice day. What's the date?
Next Friday.
We're not done with this yet, because if I was them, I'd be buying the shit out of SLV and buying enough March futures that I could push this market really hard. I'm surprised that they haven't shown up yet.
Hey, Ira, I got a question on that. Just like talking about the cryptocurrency again, like if they went to a government controlled cryptocurrency or issued cryptocurrency, then just kind of popped in my head, like if they want to control then the interest rates, I mean, think about how like the gas prices change at the pump. They can just say they control it and your account goes to whatever amount that it's now worth. Is that kind of, I mean, is that possible or am I wrong on that?
No. Listen, there are a lot of things here that we don't know and understand yet. Now, you're talking about the blockchain effect. And listen, if we truly go to the widespread use of the electronic ledger, Wall Street's in serious trouble as far as I'm concerned, because their fee structure is going to get destroyed. When you can control your own account and move things without them being involved, things will change dramatically. Stock lending will change. A lot of things will change. The cryptocurrency craze from a central bank perspective, and I've read the academic literature on it, by the way, written by Rogoff, Summers, and others, and they want to go to electronic money because that, part of the problem of going to zero and negative interest rates, and everybody talks about the classic discussion in monetary policy of the velocity of money. Well, when you drive rates low enough, and this was argued back in the 30s by Joseph Schumpeter quite brilliantly, I might add. And I'm sorry again to be pedantic, but I have to give you the context of it. But you go to low enough rates and people take their money out of the bank, right? If the bank is going to charge you 50 basis points to deposit money, how many of you are going to put the money in the bank?
Not
Right.
I.
Right? Because you're going, so you're going to seek alternatives. And now we can laugh that, like in The Godfather, we're going to the mattresses, meaning that the money's going in the mattresses. But we know that it'll be put to work other ways. Stock market, people will find ways, but they're not leaving it in the banks. So this has bothered them because they always believed, like in Europe, that if you went and took those rates into negative, that this would stimulate lending. But it doesn't work that way. Because again, if you're an entrepreneur, if you're a restaurateur, let's go back to the restaurants, and business is shit, it doesn't matter that interest rates are zero. Why are you going to borrow money? So even at going, negative with interest rates at zero, it just, there's no velocity to the money. And people will take their money out of the banks. And again, they might put it into gold. Precious metals are a store of value. They are not a creator of velocity of money. They're a store of value. And if people do that, that's like putting your money in the mattresses as far as classical economic, because, you've heard Buffett talk about gold, right? It yields nothing and it has no purpose. Well, it does have a purpose, a store of value. And which is why, by the way, the United States in 1933 and 34 went off the gold standard, by Roosevelt, and made it illegal to own gold, just for that reason, because it wasn't helping. So with electronic money, forget about negative 50 basis points. Oh, our interest rates going negative? They'll take them to a ridiculous level, 5%. Okay, now you hold your money electronically, which is no different than really having a debit card when you think about it. But if they're charging you negative 5% on your electronic money, what do you think you're going to do with that money? What do you think you're going to do with that money? Now,
Put it
it's,
in the right
Move
into
it
the
somewhere.
Matarats.
huh?
Spend it.
Spend it like there's no tomorrow, because you're nuts, because it's going to just erode on you. I'm going to whoring and drinking. I'm doing everything that I possibly can.
No doubt.
That's what they want.
Well, that was the old comment about gold, right? You can't eat it, you can't drink it, you can't fuck it. So why have it?
Right. All it is a store of value. But it is also a means of exchange, because we know that people will take it, just like we think they'll take Bitcoin. But the problem is at 53,000, you got to start slicing and dicing a Bitcoin in order to spend it. But right now it's being used as a tool to establish some sense of a store of value. Same as gold. See, I think the Chinese, again, will come with a cryptocurrency. I think the Russians will do it too, backed by gold. And I think the Chinese will do dual
That's it.
silver and gold.
Oh my God, Ira, you remember how mad Judd would get at me? in our first conversations, and when I kept asking you about China and Russia going to some sort of an asset-backed currency, and he would call me a go-by. He'd get so mad. But up at that point, 3 years ago, it was kind of a conspiracy theory, but that has evolved into kind of reality. You know, and it's almost undeniable now. It's so interesting to see that happen. By the way, I think the gold, not gold, I think Bitcoin, Mike, trades a lot like the NASDAQ used to before pre-2003, when the algos took over the volume. When we still had control of that market, we were making the markets. Man, that NASDAQ, what a great trade. We had 300, 400, 500 point swings daily, every day for 2 years.
Right.
Yeah, you know what? So these are the things that you're seeing playing out. And I've read, again, the academic literature is out there. Nobody talks about it though, but they have an end game here. And they're so pissed. The classic economists, the classic Keynesians are pissed because they're trying to overcome what has been known about what's called the paradox of thrift, which is when you take Keynes even, you know, when you take interest rates so low, all you do is force people to save more in some way or another because they're worried about the future. The less you're earning on your investments per se, the more you're forced to save. So if you were a buyer of T-bills, I spend a lot of time teaching my son-in-law, Lizzie and Josh about this. And again, I explained to you, if you had let's use round numbers. So if you had $1 million and you're a conservative investor and you say, well, I'm going to buy a 2-year treasury note. So I asked them, how much do you think you'll make in interest over those 2 years if you bought $1 million note today?
2,000?
Well, you would make, let's see,
20,000.
I have to do the math right. So let's see, you'd make $2,000 in earnings on $1 million.
Jesus, I was right.
So let me raise your hands if you're signing up for that return.
Oh,
Anybody? No. So
No.
So that's, you know, and when you think about it, well then, what the hell? I may as well buy Verizon and get a 5% dividend and run the risk of the stock, right?
Or buy real estate.
Or buy real estate. But we know, see, it's okay if you buy real estate with cash, but then you're taking the big returns out because we know what happens when, just like in the futures markets, if you buy it with with a great deal of leverage, when prices, which they will do, ultimately turn down, what was when you were giddy, think about 2006, by 2008, everybody who was giddy was then crying their eyes out. What did I do? You know, I own 4 houses. This was great.
Yeah.
So giddy. Leverage is a great thing when things are working your way. Not such a great thing when they blow up in your face.
It's actually one of the reasons why I've been so reticent so reluctant to buy any real estate in these last couple of years.
No, I just sold my house. In fact, I have to come home and clean it out, but the house is sold. And if you ask me, I gave it away, but trying to get out. And I'll save $20,000 a year in property taxes. It has some value to me. So,
my God,
in general maintenance, and I don't even live in a high tax, and we fight our taxes, on the triennial assessment every time. So,
$20,000 a year in Lincolnwood, right?
Right. Yeah, I have a ranch house. It's okay, but regardless, we can't get away from, there is this push-pull going on in the market. When will it resolve itself? I thought I knew. I don't know. Because again, what's the break point for the Fed?
I don't think they know. I don't think they know. I don't think Powell knows.
Oh, they know. They know. Here, let me pull up My dear Alex wrote me some, because I was playing golf yesterday, so I wasn't, when the minutes came out. Let's see, so she wrote me up. Oh, let me go to that. I have to keep this as new. What did she write me? Let's see. Where are you, my little monkey? I was actually playing golf with her, her in-laws, so I was serving a good purpose. Let's see. Okay, so she wrote me these up from yesterday. Most of the steepening, this is from the minutes that was discussed. So most of the steepening of the Treasury yield curve occurred after the outcome of the Georgia runoff elections, okay? Which is interesting. Because see, it's not the Fed's fault. The market was just, you know, they were well, here's what they say, reportedly bolstered market participants' expectation for additional fiscal stimulus. So see, in anticipation of the Democrats running the show, interest rates on the long end, where they could, because they're not controlled by the Fed, responded by going higher. FOMC's updated guidance around asset prices was seen as broadly in line with expectations and did not elicit noticeable financial market reaction. Really? So let me look. Let me look. I can date that. Yes, I can. So that was the week of 04. So yeah, we're still about 3% higher from where we were, you know, in reaction to that. We've had some, you know, a little volatility, but the market's still okay. 3% is not enough, but it's coming on, of course, massive rallies. Then they note the broad dollar index was little changed on over the intermediate period, while the Chinese renminbi appreciated notably against the dollar as data showed a robust economic recovery in China. Dollar funding conditions were generally stable around year end. So, okay, this is all from there. Let's see. Oh, then there's also a little discussion, because even if more notable downward pressure emerges, meaning, so if these rates go, now this is from Lori Logan, who runs what's called the System Open Market Account, which is the Fed desk where they do their QE buying and selling and everything else. That's where the Fed operates in the Treasury market. Logan anticipates that the Fed's tools will, including the interest on excess reserves and the overnight repo facility, continue to provide effective control over the Fed's funds rates, but that's only on the short end. So they think they can control them from going negative. They're worried about them going negative. So there's really no response to the longer end. Then on financial stability, several participants noted areas of strength. For example, the banking system had shown considerable resilience since the onset of the pandemic. That's true. Bank central positions had generally remained solid and earnings were strong. In addition, results from the most recent stress test indicated, okay, nothing. So more on financial stability. A few participants, and this is important, stated that it would be important to stay vigilant to ensure that the banking system remains strong and resilient. In addition, several, they use these numbers. Tell me how many. Several participants noted that the pandemic had highlighted structural vulnerabilities in other parts of the financial system. These included run-prone investment funds and short-term funding and credit markets, as well as the fragilities in treasury market functioning. Stresses stemming from these vulnerabilities have required substantial intervention by the Federal Reserve in turbulent market conditions at the onset of the pandemic. A couple of participants commented it would be important for the appropriate regulatory bodies to address these financial stability vulnerabilities. So it's not the Fed's, they would like some of the regulators to do the work to maybe curb margin, whatever. The Fed wants it all here. I don't know that they can have, I never believe that you can have it all. And that's what it seems. Well, let me go back to their conversation on the yuan.
Yeah.
Now, I am of the mindset, and I've been very consistent about this. The yuan is actually higher. You know, we're coming off of now the end of Lunar New Year. So the yuan is actually, dollar yuan is higher after not really trading. So we'll see what this does. But see, what I disagree with the Fed totally on this. It doesn't really reflect how robust the Chinese economy, although it might be. But if the Chinese economy is so robust, why is growth lagging in the rest of the world? Because you can't have one unless the Chinese are allowing their currency to appreciate because they're making a pivot to a greater domestic-based economy. And this has been my point. So if that's the case, you want the currency going higher, right? If I'm the Chinese, the stronger my currency is, the cheaper soybeans are in terms of my consumers. The cheaper copper is, the cheaper iron ore is relative to other things. And we have copper today, and this is kind of sticking in everybody's, you better pay attention to it. Copper today hit $3.93 a pound. Now, the global economy at this point does not reflect copper being at those kind of levels. Let's look where we are on a historical basis.
That's exactly what I'm looking at. Is copper so strong because of the upcoming infrastructure spending in the next few months, beginning of it?
Well, maybe in anticipation, but we're going back to
2012. We're taking out 2012 highs.
Yeah, and that's when all the commodities went crazy after all the QE that was done
Yep.
to overcome the effects of the great financial crisis. So we're back in these levels, but the global economy, the Chinese economy back then was really strong. They were, we were talking about 8, 9, 10, 11% GDP growth. This year, I think they're talking about 4.8. Yes, that's not a much bigger number. So I will take that into account, but the global growth story is not that strong. And yes, people might be buying it, but somebody's stockpiling a shitload of it. Now my currency is going up, and assets and things I can purchase become therefore relatively cheaper. Everybody following that? Because this is a difficult part that people have. I assume that this is pretty easy, and I always get in trouble. But the stronger your currency, and if you're importing things, the cheaper on a relative basis they are to the rest of the world. The same thing with soybeans at $14.
Oh, yeah.
Same thing is, now we've gotten, and I will take a bow on the platinum call. I know certain people traded it very well. I didn't trade it as well as I ought to have, but it was very timely.
It was very timely, and I didn't trade it well either.
After the last, 2.5 weeks since that silver scare, it was platinum that's up, $250.
Yep.
So there's a lot, and I always said that platinum is much more an Asian way than it is others, because the Asians buy it for jewelry a lot more, and they actually use it as a precious metal in some regards. So it does play out, and that's really a statement about it. But all these things are in play and going on. But where the Fed sees that, I see it as a totally different thing. And as I said in Judd's room the other day, when I was thinking about this out loud, I'd actually spent Monday on President's Day thinking a lot about this. I said, the Chinese are fucking us again. And I don't look at the world like that. The world is so dynamic. You know what? Things take place. It's not a matter of who. I don't look at it like that. But when the Chinese depreciated the currency back in 1994, and they've spent the last 25 years approaching back to that level when they devalued it 50, but that was to stimulate their export model. But if you're changing to a consumption-based economy, you're stimulating domestic demand. You want a stronger currency, and that's what I believe is going on here. So you may as well take advantage of a strengthening currency and keep buying all the things you need. You need iron ore for steel? Yeah, I'm buying that. And as long as your currency is going up, why not? You're taking advantage of it. And I truly believe that's what's going on in the world. That's why you see commodity prices exploding because the Chinese are just, they're building stockpiles.
We're building stockpiles and everything.
Everything. And you know what? It's a smart policy. And don't forget the Chinese do everything top down. It's not the bottom up that are making the decisions. This decision's coming from the top.
Ira, I'll throw in one fact here that with this copper move that electric vehicles in theory use 3 times more copper than conventional vehicles.
Right. I know that. So yes, and that may have a lot to do with it, but we've watched this sustained move for quite a while. And now, you know, where Tesla's been, well, and forget Tesla, you know, I can't use it as a barometer or anything except Elon Musk's ego. And I respect Elon Musk immensely as a visionary and a genius. There's no question about it. But he gets a little too chirpy for me. But copper is still going up. And yes, and yet they're mine, you know, yeah, there's some strikes here and there. Let's go look at a couple of things. You know, and it's put me into, you know, where I think Glencore, and of course, Freeport, you know, was probably one of the best stock plays I ever made. I'm out of it now, probably at around $25 or $26. So I've missed the last $8, but okay, it was a really good play. But yes, I agree with that view. And the market had anticipated that up to a point, but the sustaining of this rally is really amazing to me.
I keep losing the connection for some reason.
Can you hear me?
Yeah, now I can. I've dropped off a couple of times today.
So you know what? So you're still looking at this, and its ability to this rally sustaining itself is very interesting. Yes, and I know part of it is plugged into that. You know, what Wall Street's looking for is for this phenomenal boom to take place once everybody, or you know, 50% of the population is vaccinated, and that things are just going to explode because we have all these savings. Okay, but isn't that kind of built into the price already? But it's not built into the price if the Fed doesn't raise rates in response to that.
Ira, why aren't we hearing anything about any definitive, or not even definitive, but just detailed plans or detailed ideas of what the infrastructure rebuilding of our country is going to look like?
Yeah, that's a very good question. You know, and I hold the Republicans and Trump highly responsible for not really having. There was a lot of lip service, especially Trump, who, you know, what was that show that my kids watched and the kids watched years ago, Builder Beaver? You know, that's what Trump, you know, he thought of himself as the great builder, but there was a lot of lip service and yet to see any plans. Yeah, they did LaGuardia, which was a third world airport at best. And I hate to defame the third world because that was what they've spent a lot of money there, but they can do that in so many places. So, and that's not even talking about building out the power grid again. And just in case for all those who missed it, what's going on in the country now. So, yeah, you know, somebody just sent me, you know, Texas, and I've driven through those parts of Texas with those windmills. And, you know, again, that's what makes Elon Musk so powerful, because that's all battery storage. That's the issue, because if you could draw from the storage, then you could be down for a period of time. But if you're not in alternative energies where they have storage capacity, because when natural things hit, you get interrupted. So, and then people get pissed and they don't forget, you know, and that's why you see fossil fuels, they don't disappear so fast.
We have a couple of traders. I'm sorry, who was that? I stepped on someone. We have a couple of traders in here right now. in Texas
Yeah.
that have been out of pocket because of no power all week long.
Right. Right.
And today's the first day. I don't know if Shelly's here or not, but today's the first day that they had any power. You know, they live on the coast. It's 65, 70 degrees there. It's supposed to be now.
Yeah.
I couldn't imagine.
So the grid needs a lot of work. We need to build out that smart grid. So there are massive infrastructure. And again, those are far better. You know, for the last year, we spent just, you know, transfer payments to support demand, underlying demand to people, to make sure they had enough money through, because they got laid off through no fault of their own. And I'm not arguing with that. You have to support demand, especially for those who are most vulnerable. No question about it. But you have wasted a lot of time when, and when those massive layoffs came, you needed to have these plans in place. Government just doesn't do it well, because you needed to, you had people then to put to work, because the arguments of David Rosenberg and others was, hey, when unemployment was 3.5%,
Where's it coming from?
you can't do infrastructure programs because you don't have the employees. So you're going to be bidding for employees and drive wage. It's insane. And there was truth to that. But when the unemployment situation rose, you were in no position.
And now that we've got people on the sidelines looking for that kind of work. I mean, that's what I keep thinking. The Fed and the Treasury are united in maximum employment again.
Right.
You got all of the stimulus money that's being discussed and bandied about and thrown out there. If they want to start to achieve maximum employment, they can start putting people back to work and rebuilding the roads and bridges that have been neglected since the Eisenhower era. The highway system that have just been patched over for so many years that needs to be updated. Just so many different things. Rebuilding the grid, which is so much in focus now because of what's happening across the country, not just in Texas, but all over the place. All of these things. Now we've got the workforce. It goes back to what Mike and I were talking about when you stepped away for a minute, is why aren't trade schools full? You know, you go to the electricians union in 6 months, they're paying you to go to school, $18 an hour. That's significantly higher than minimum wage, and they're paying you to go to school.
Well, you know, I can speak to that because I was working on a program with, it didn't get far enough. Mike, are you still on?
Yes.
Okay. So back in the late 90s, when did MJ move to Cincinnati?
Oh, God. Before then.
But he was there in the
I'm
90s.
guessing- I'm guessing in the 80s, because he was on that trial, you know, with all the outfit guys in Chicago.
Yeah.
And then he was on the grand jury, and then they wanted to reconvene, and that's why he moved to Cincinnati. Whenever
So
I'm trying to think what the trial was, who was involved.
So, but he moved to Columbus and then Cincinnati, right?
Yes, right.
Okay. So, one of my dear friends who runs inner city school program, I can call her a friend, had come to me and said, there's all these places, because she was in right on the border of Woodlawn, Hyde Park.
Mm-hmm.
And I can tell you exactly at 50th by Drexel, right across from Operation Push, by the way. And she was running a program with 95 kids. And when some of them who would walk to her after school program, which was phenomenal, she did phenomenal things. It's still in existence. It's been in existence for longer than Santa Mike by about 9 years. So
This is Arnie Duncan's mother, right?
Yep. So
Yeah.
Sue came to me and said, look, I've got all these crack houses. They were all old abandoned apartment buildings, and where, you know, the druggies and the kids were frightened about walking. She says, why don't we buy them? And
I remember this. Joe Gardner was involved in this.
no, this was me. So I said, Sue, I think that's a great idea. So I went to talk to a few people, and you know, because I would hire retired union guys, electricians, carpenters, iron, whatever we needed, and try to get the federal government to fund it, to educate black kids, because she serviced all but who were unemployed, and teach them a trade, expedite the whole matter, and get subsidized to pay the retired tradespeople to teach them. So I went to one place, and we could have bought these places for nothing. And my idea was to give them all a piece. So we'd start a corporation, and the guys who became tradespeople would own all the buildings that we renovated. You know, the investors who I would line up would own 50%, and we would distribute it. Well, there was no way, once the union in Chicago, they weren't going to let these people do this. So I was telling MJ about it, Mike. He says, that's a great idea. He says, I'm buying properties in Cincinnati. That's a great idea. So then he went back to Cincinnati. I don't know where we were at. Maybe, we were just, he said, I love that idea. You know, Marty is, so he calls me, he goes, you got the wrong guy. This is too much work. I can't do it.
Hello.
You muted out.
I'm
No, I
falling out.
did.
Oh, I
Oh,
did?
Ira did.
Yeah. Oh, you're
Oh,
back now. All right. Yeah,
okay.
we missed you. You all of a sudden
So-
jumped out.
Cincinnati was a non-union town. We thought we'd get it done. So the idea was phenomenal, but it wasn't going to happen in Chicago, by the way.
There was what reminded me of that, Joe Gardner was working on something. I think he was he ended up getting indicted, or was close to being indicted, Operation Silver Shovel. And but Gardner he had a bunch of kids from that the Hyde Park Woodlawn neighborhood that they were knocking down old buildings and rebuilding things too. I don't know. I remember they had a huge huge budget, something like $8 to $10 million a year. I got to look it up. I forgot all about that. And I ended up trying to start our own little thing with Father Flagger and teaching kids at St. Sabina's about the banking world and about the trading world. And that ended up falling through.
You know what, Matt? And there are things that can be done. I read a story on Monday, I'm not sure where it was at, about the ex-NFL football player who was taken on by the big guy in New York who's building Hudson Yards.
Yes.
Did you read that story? It was really
No, I saw it, but I didn't. I meant
so
to.
so he learned under him. So now he branched off and is doing exactly this in the poor neighborhoods with renovating all these buildings and giving, and these people are doing it, and he's providing a lot of good jobs. So he's doing it. I applaud him. But
Good.
I couldn't get it done. In Chicago, it was just not going to happen. And he got guys from Hudson Yards, some big real estate investors in New York, put the money up behind it, and they're doing gangbusters. So this was an idea. I mean, I saw this 25 years ago, and it was at Sue Duncan's prompting because she was so upset about it. I've had some idea. You know what? I'm a good idea person. I'm not good at the logistics of getting stuff done. That was one I just kept getting stonewalled. And I figured if I'm a retired tradesman, I could make a nice living educating these kids, and it's all covered by under, it should have been a government program to say, you know, it's an easy fix. And I was really furious at the 2008 Democratic, which one was in Chicago? Was it 2008 or 2012? The Democratic Convention.
I remember one or the other. I think I don't remember. Hillary.
Well,
Wait.
I was furious because as I'm watching the celebration of the speeches, and there was International Brotherhood of Electrical Workers with probably about 3 black faces holding their signs up on the stage, and who are you bullshitting? You know, I couldn't get this done. You know, and I said, that's one of the things that irritates me. That's just pure bullshit because you could have opened this up. Now, listen, if I'm a union guy, and I grew up in a family that respected private sector unions immensely. In fact, my grandparents were all hard union members. And I respect the private sector unions. Again, public sector unions, no. For private sector, you know, go get all you can. But they could have done a lot more good. But I understand they were protecting your kids' jobs. And Matt, you saw it far more than I saw it, because the neighborhood you grew up in, those were a lot of union guys.
Mhm. Yeah, they were. And they all had Irish names. Even if they weren't Irish, they changed it.
And I'm
Yeah, there's only two people in the world, the Irish and the ones that want to be Irish.
I remember there was an old Italian guy that was precinct captain in our neighborhood, Tony Laporte. My dad went to him. There was a Chinese guy that lived on the street. He wanted his son to get into the electricians union. So my father went to him and said, listen, Tony, he was from Italy. Can you help get this guy and his son into the electricians union? Tony looked at him, looked back at my dad in a deadpan way and said, he doesn't have a Chinaman's a chance. You can't say jokes like that anymore, but it's just one of the best ever. And I'll never forget it.
Hey, I'm gonna tell you what, I knew a lot of guys. In the carpenters, you were either Italian or Scandinavian. The Swedes were very powerful in the carpenters union. Electrical workers, yeah, heavily Irish as I remember it. As well, the plumbers were Italian and Jews, by the way.
Yeah.
Because I grew up, you know, a lot of people I knew were plumbers.
Remember the sheet metal workers, the sheetios, they were all Irish guys.
They were all Irish guys, right? And the iron workers, a lot of Irish guys.
Yeah, still are.
Yeah, yeah.
Because you'd have to fucking be drunk to get up on those goddamn. What are you?
Yeah, you have to do 2 shots for breakfast before you
Oh
get
my
up.
God. Oh, who would get up? You know what? I once went up on a building and I wasn't even working. I took the elevator up, you know, and somebody wanted to show me. I said, can you please take me down? The building's swaying. I go, are you out of your mind?
Somebody asked me years ago, somebody would say, don't you find trading stressful? Isn't trading stressful? I said, no, trading isn't stressful. Driving a truck for your uncle when you're 18 years old, trying to back a Mack tractor or a Mack truck back into a tiny little hole with about 3 inches on either side of your mirror, that's stressful. When your Irish uncle pulls you out of the truck, screaming at you with the full Irish brogue, slapping you around in front of everybody, that's stressful. Trading is easy. Or working at the Prime Cut restaurant in the Motor World Hotel on 53rd and Pulaski.
And tell Mike who owned that hotel.
Your father did.
Really?
Yeah. That was a terrible job.
He owned it with Benny Freeman, the plumber. That's Wayne and Steve's dad, Benny Freeman. He's a
No kidding.
Oh, yeah.
Yep. And he learned to be a plumber because my dad and him used to hitchhike when they were 13, 14, 15 years old to New York. Benny had an uncle who lived in Brooklyn who was a plumber, and Benny learned to pray. My dad just used to hang around, but that's when he was boxing. So my dad was already 15, 16, and he was boxing. So he used to go to the gyms because he was Golden Gloves boxing. He was young, but so he actually, there was a guy in Chicago who was a neighbor of mine who was going to make a movie about this Jewish boxer from Brooklyn. So he asked my dad, we were having, I don't know, brunch or something. He said to my dad, he said, hey, Joe, Ira tells me you're a big boxing aficionado. Yeah, I said, yeah. He says, well, I got the movie rights to this guy from Brooklyn. And he said, and I want to know, do you ever hear of him? So my dad name. He says, Boomy Davis. My dad says, Harriman. I used to spar with him when I used to go to Brooklyn, when I used to hitchhike to Brooklyn. He says, you're bullshitting me. My dad says, he said, Kerry, one thing I don't do is bullshit. He says, let me tell you, they sat, he was enamored with him. My dad was telling him all about him. He said, yeah. Yeah.
How's Wayne doing? Do you see him or talk to him?
Not well.
He's not doing well
No. He said
physically or just
all kinds of ways, unfortunately. One of my favorite people. Really struggling and has struggled.
I just hate to hear that.
Yeah. But his dad, my dad, they owned, because he was a plumber, but he would see buildings and stuff. So, he'd always, my dad was better financial than Benny was, but Benny had a really good eye for stuff, very good eye, because he knew the plumbing, so to speak.
Hey, Mike,
Yeah.
here's a question. Do you remember the day in the pit? This is going back 20 years. I asked you if you were related to Eddie Sturch.
Yeah.
Do you remember that? Eddie, my father he was telling a story about my grandfather, and he was talking about Eddie Sturch, and your grandfather and Eddie Sturch, and so Sturch. I asked you the next day, and he said, "Oh my God, it's my uncle."
Yeah.
Well, small world that we're all the three of us all have all of these things in common. Just even if they're just little things in common from being from the same city.
Yeah.
Relatively similar backgrounds, right?
Usually when I hear Eddie Sturch, I have to run away. I don't know if I'm going to get shot at or beat up.
Yeah, he was supposed to be a real tough guy.
Well, he owned the Torch Club, which was a book joint. It was a speakeasy. There was a bar in front, but all the money was made in the back with the horse racing.
Yeah.
Yeah,
No, maybe that's how my grandfather knew.
It's like Friedman's Deli.
Yeah.
The place was a small deli. It had 15 phones on the back wall. I never understand.
Where was it, Ira? On the west side?
No, it was on Western and Devon.
Oh my God. It's a different
Yeah.
world.
Guys who wound up owning Myron and Phil's.
Great place. What a different world.
That was
See,
that.
that's what made this country great. People didn't have a safety net, so they had to create their own.
I tell you, my dad had a few friends who were bookies, and when they would call, they were always in a phone booth somewhere.
Oh my God.
Tell your dad to call me back. I said, where are you? He says, here's the number. Don't worry about it. I said, Dad, it's Uncle Jakey.
Oh my God, yeah. We all had uncles that weren't really uncles.
No, tell him to call me back. I'm telling you, then Billy Siegel, who owned the steak joint, was a neighbor of mine when I lived in Old Town, but his uncle owned the Black Angus, which was a popular
Herb Singer, right?
But that was on my route, because my dad would say, stop at the Angus, whatever you're doing, and there'll be an envelope, Irv Singer, because my dad used to, Irv Singer, they were all booking bets.
Hey, you were right, Mike. How'd you know that one?
One time when we're together, if you remind me, I'll tell you a great story about Black Angus.
I will.
Okay, it's a classic.
I can't wait to hear it. It's a classic.
Well, here, I'll tell you. I can tell you.
Don't tell it.
Yeah, let's wait until we have some brown liquid on ice in front of us.
Don't tell it.
You want to meet in a half hour?
Hey, I played golf with Rosie and Pearl the other day.
Who?
And Howard Bowman.
Who are those guys? Are they old currency guys?
You don't know Howard Bowman?
Oh yeah, I do. Yeah, I thought you said Mormon.
Bowman.
My God, how are they out there retired?
No, but they were all sick at one point. So I hosted them to play golf here in what we called the L'chaim Open. I gave them each a dozen golf balls with their L'chaim Pearl, L'chaim Merrill, and L'chaim Howard. About a dozen golf. To commemorate being alive and enjoying life. You know what? That's all.
When are you guys coming back here, Ira, for summer?
Well, I have to come back in March to pack up the house and get whatever we're gonna move here and then get rid of everything else. So, and then I don't know, man. My whole life is gonna change dramatically. A house I've been in for 37 years. All those memories, all they are is memories now. So,
Yeah, that'll be hard.
yeah, that's not an easy time, but time to move on. Got great. But any other questions that I missed? Because again, we're going to keep coming back to this. Now, my beloved just sent me an article. It was a Bloomberg article. The title of it is 5-Year Treasury Yield Leaves Mizuho Sweating. And if you put up that 5-year futures chart, that's an interesting chart. It was really top heavy at the close on Friday.
What's the 5-year? What's the CQG symbol for 5-year?
It's F V
Yeah.
A H. 1.
Oh my God.
Now that has actually been well bid on a relative basis because people feel much more comfortable. So they've played the more aggressive players in the steamers have been long 5s and short to 30, which has been really, it's a 4-to-1 ratio on that, by the way, for your home gamers.
Are you ever trading the 5-year?
Yeah, trade all the time.
Yeah.
In fact, I saw the way it closed on Friday under the 200-day moving average, I believe.
Yeah.
You can put it up, you can see it.
I'm looking at it. It got whacked.
Yeah, and I really was heavily weighted short but I bought some 10s against it. So I wound up taking a good trade and getting into a small loser, which I was not happy about because I could see that formation. That was really the top. As my great technical teacher taught me, that's broadening formation was really a powerful breakdown. And that's it. Any other questions? We really haven't, but that's what I'm trading off, with the algos. If they want to create that and still make it the pivoting point, fine, you go with it. But until I hear something out of the Fed about what their plans are as to on the long end, I don't think we're going to get any major direction. Steepening curves, I will advise you, are not in the beginning bearish equity markets, nor are they typically. But again, because we are in new territory at the zero interest rates, steepening yield curves are also bearish currency. So if typically the dollar would be bearish because it would reflect that the Fed was behind the curve. It'd be forcing the Fed to make a move. But if they're pinned at the zero, I don't know, because now we're using the 30-year as the pivot, that the 30-year is going to be the tail that wags the dog. I say no, but the market says yes. So until I get absolute direction from the Fed, and we will have a long discussion about it, but the only reason I put it out there, because be aware of it and look for it. Because I believe it will come. When? I don't know.
Equities aren't rallying yet. The indices, they're holding their strength. Just haven't started another leg up.
Right. They're holding their strength. And that's an important thing. They're holding their strength.
Oh, sure it is.
Much of a correction, and you're at all-time highs.
Yeah. Well, Ira, I'll let you run. thank you again so much for spending time with us. There are a lot of other questions that we'll get to later on, and I think that we've gotten to
Well,
most of them and answered them.
Wait, some of those questions, I think are above my pay grade, but let me go to them. I know you.
We answered a lot of them too.
Well, but some of here, I know. I really, let's see, I did, the Amazon rainforest, I can't make it, you know what? That involves so many different, I don't know how to answer that. I mean, no, I don't have an answer. Wait, hold on. I had scanned these. The question about Australia, China, you know, I don't think Australia is just tied to China. You know, they are because Australia is a very big piece of property with massive amounts of resources. Kind of think in terms of if the Russians can get it together with Siberia, because they have such massive resources that they are just a natural supplier to China. So even though there's been some, and we've talked about this because the rally in the Australian dollar really didn't make sense on the face of it because the underlying friction between China and Australia, and we had talked about it, which told you how strong the currency really was and the commodity game to go with it, right? That was really a very good barometer of what was going on underneath. Because while the Chinese were carping at the Aussies for being close to the US and sanctioning, but meanwhile, it kept going higher. The question on the Panama Papers, I don't know. You know, I don't know. I don't know enough about global taxation. I know more about the economic outcomes from taxation, but so I don't know. It's a question I'm really not prepped to answer. So somebody can do some research and answer for all of us, but that's my quick take on it.
Spiros sent a couple of topics in too, and next time that we're in, he's in Hong Kong, so I'm sure he's sleeping. He's got an interesting take on things. He came in one day, Anne-Marie Band, remember Anne-Marie?
Sure.
Yeah, so Anne-Marie came in and we had a really good
one of my
conversation.
favorites.
Mine too.
Yeah.
Mine too. Anne-Marie came in and we had a really good conversation with Spiros, just between her and Spiros talking about all kinds of really interesting issues.
Well, you know, there's a lot of moving parts here, but I will say this when it comes, you know, last year or 2 years, we were discussing Hong Kong, and my view has always been Taiwan is the the sideshow. Unless, of course, you live in Hong Kong and you say, oh, no, but Taiwan is going to be the serious issue. It's been the serious issue since Nixon went to China in 71, 72. Because the issue has to be, and I don't know why people are afraid to ask the question, would the U.S. risk thermonuclear war to save Taiwan?
That's a scary question.
It is, but you know what? Kissinger and Nixon had to discuss that back then, you know, with the whole China policy. So Taiwan exists, and it's an interesting place for the Chinese always to put pressure on the global, you know, situation, which is why the U.S. has to be careful, because how far will they go? And is China worth it? But I asked the same question about Turkey as far as NATO, because don't forget Turkey's a member of NATO, and if Turkey went to war with Russia, which has many historic conflicts to have confronted, would the United States risk war with Russia under the collective action clauses of NATO, which they're required to do? So, you know, which is why the Trump team was not wrong in asking these questions. It's just the way in which they asked them. Was NATO over?
Hey, Ira.
Yeah.
So, you know, I'm always very anal about Taiwan because half my family is there. and actually was considering retiring there. But I mean, like today, just kind of like totally freaked me out that I read the Taipei Times every morning, and they're going to, what do you call it, do a probe into, they were trying to get vaccinations from some of the leading companies, and they had negotiated a deal. And like in the last 15 minutes where they were about ready to sign the papers, it was suddenly put on hold and was given no explanation. And it took multiple weeks before they could get the deal done. And they were trying to buy something like 20 million shots. They were only able to get 5. They're trying to get another 15. But the newspapers blaming China for putting the kibosh on the deal. And they're, want to make a stink about this being, like China's even weaponizing vaccinations. So something to look up.
Hey, you know what? But that's the way China plays. They look for, but the United States does the same stuff when they, that's how sanctions work, right? And it's a two-edged sword because I find out where your vulnerabilities are. And hey, you want to do business with me? Don't do business with them. And it's a terrible way that the world works. But those are the realities that we allow to take place. I'm never, listen, when there's so many issues, and I'm glad we're discussing this because I've now picked up and now about 40% through with the wonderful, I didn't like the first 150 pages, but the biography of Deng Xiaoping by Ed Vogel, who just died at 90. But it's an interesting biography. And as much as I think I know about China, it fills in because he's such a pivotal character, especially the last 40 years. So I'm enjoying reading it, but you see, going back to the Kuomintang with, the break between Chiang Kai-shek and Mao, there are a lot of pieces of unfinished business. And the world sometimes wants to just pretend that they don't exist. But the Chinese, for a minute, never stop thinking, because the Chinese have this is not a racial comment. This is the way that they view history. The Chinese have thousands of years of history. The United States government is 250 years old. It makes concepts so different. And they hold these things very dear. It's one of my issues, and I have a blog piece, when I was talking about silver, and I always come back to this theme because I love it, is the Opium Wars. And the Chinese haven't forgotten what the Opium Wars was about, the ability to destroy or really harm the Chinese economy in the 1850s, 60s, 70s through the depreciation of silver by selling them opium. They don't forget these things. It doesn't matter who's in power. They are very aware of their colonial status at one time and the way that they were treated. And you read pieces, and when even in the they talk about how when Deng and Mao and Zhou Enlai, the leaders of the communist revolution, how the colonial powers, when they broke up China, and I read that book too, written in 1898, The Breakup of China by Lord Charles Beresford, they talk about the humiliation of colonials coming in, and their words, not mine, treating Chinese laborers as coolies in their own country. This still sticks in their mind.
What are your thoughts, Jeff?
Was that, you said that to me?
Yeah. Any follow-up thought?
So it just like, I just, it's interesting that, how many times, like China has violated Taiwanese airspace recently, and it used to be reported on a daily basis. But I think that, you know, the Taiwanese aren't reporting it anymore because it was actually freaking out their country. A lot of my relatives felt like within a couple of years, Taiwan would be militarily invaded. But I question that, you know, the importance of the semiconductor industry in the whole world and how much Taiwan supplies of that. And, you know, even with TSM building the plant in Arizona over the next couple of years, I mean, how much the world is dependent upon really Korea and Taiwan for the semiconductor issues. And it just, you know, I don't know. It just, you know, I have a very biased opinion on it all. But yeah, I could just ramble on, but I'm just like wondering how Biden is going to deal with the Chinese and the fact that the first phase China deal was just, you know, China did not live up to their end of it in any form or fashion, and how the world is going to play China and how the different things with the EU agreements recently with China. It's an extremely complicated issue that just concerns me personally in so many ways.
Jeff, and that's exactly right. All the deals, I'm not sure, you know, first of all, when people throw out the term in any, especially when it comes to Mideast, people throw out international law. First of all, you couldn't get 100 attorneys to agree what international law is, right?
That's a great point.
You can't. And I've studied international, you know, I can go back and discuss Hugo Grotius, because that was the mainstay of my graduate work with international relations and multinational corporations out of it. But the discussion of international law and what international law is very complicated, because is it enforceable? And, you know, and law is only good if it's enforceable. Now you can enforce it by consensus, but that doesn't, you know, because people can walk away from treaties and go, you know, that was a previous government. The United States has done it. I'm abrogating that treaty. I'm not being held to it. My populace elected me because they were opposed to it. I'm violating it. I'm just abrogating it. See you. Now you're left in a very difficult situation. Taiwan will always be a very difficult situation. And now you're seeing it, of course, with the Senkaku Islands, Japan. I read the South China Morning Post, which has only been over the last 6 or 7 months. I would read, you know, people would send me an article, but I actually subscribe to it now. I just want to see what the mindset is coming out of there. And I think there's a lot of reasons to be worried. And China will make the play when they think that there's enough vulnerability. But this is not new, by the way, because if you go back to and look at Chinese history and you go back to 1957, when China was really trying to attract the US attention, the Chinese would regularly fire upon the two islands across the Taiwan Straits, Quemoy and Matsu, you know, with artillery fire, just to keep everybody alert as to what was going on. So this has been an issue that's been left unresolved, you know, and of course, you know, the one China, which left Taiwan being knocked out of the UN, so that, you know, China could be, you know, part of the UN. So these issues will come to fruition. How they play out, I certainly don't know. I hope peacefully, but you know, because I think China is very aware it does not want to be perceived as being belligerent, right? So that place is trying to work some type of a peaceful resolution to this problem, but it's allowed to exist because the Chinese love to use it as a pressure point. When you raise the issue of the Uyghurs, which, you know, I tell everybody, and I have for years, that if you understand China and the geography of China and what the Xinjiang area of Northwest China is about, it's, you know, it's so mineral rich that, you know, and so it wasn't even the Russians, but when it was the Soviet Union, the Chinese were, you know, the Chinese feared that the Russians were going to invade Xinjiang when the Chinese were very weak. And, you know, a lot of that had to do with the US and China because Kissinger saw the opportunity. The Chinese were really afraid of the Soviets. You know, forget about the great brotherhood of, you know, communist brothers, because that was a schism that took place in 57 when the Chinese broke, or the Russians, the Soviets said, you know, goodbye to the Chinese, because Khrushchev feared that Mao was really that crazy. So he didn't want to be forced into a nuclear war to save China. It wasn't worth it. So you get the breakup. But this issue, you know, stay tuned. There are a lot of things in play here. So you're right to worry about your family. You know, there's huge investments there. And I think the Chinese would like to do it peacefully too, because the Chinese, the Taiwanese have certainly shown their ability to create a very vibrant industrial state. But I don't know the way it plays out. I really don't. And if anybody tells me they have an answer, good on you.
And if
May
they
we
have the
live-
answer, share it. Oh,
Yeah.
I'm sorry. Jim.
Yeah, may we live in interesting times. Yeah.
Yeah, I'm kind of tired of that. Let's not interesting times. How about some less interesting times?
All I do is want to drink my old Rip Van Winkle and enjoy it. That's all. I'm not asking for a lot. I have one sip and enjoy it and hold my grandchildren. You know what? Yeah. But we are going to continue to live in these times, and they're going to get more interesting.
Yeah, they
And-
will.
And you know what? And the Chinese know that anytime they want to apply pressure, Taiwan is the area that they can get a lot of people's concerns. And I agree with you, Jeff. The European-Chinese agreement is interesting. Again, it's one of those big announced agreements, but when you start to look under the hood, I'm not sure what they're agreeing to. So, lots of things in play, as we say. I think we covered a lot. Anything else you want me to do?
Oh, it was a
Yeah.
great conversation.
Well, and again, it's more a prep conversation than it is today. Let's do this. And it helps me because it keeps me out of trouble. Because it makes me be patient. The more I talk to you about the patience in this,
Mhm.
the more I have to be patient.
Yeah, me too.
And it's not such a bad thing. You could trade the things in front of you because you're not getting it. But when the market one day radically moves, you'll go, what was that about? Oh, wait a minute. Here's the Fed definitively saying what tools are taken out of their toolkit. I would tell everybody, read that piece from the FT that I told you about. What was it?
Yeah.
Hartnett, Ian Hartnett, is it? Hold on, I'll give you the exact piece. Oh, that was from yesterday, so you got to go back and get it, but it was really a good piece. Ian Hartnett.
Right.
Hartnett.
Yeah, I know.
So it's worth a read. But again, the Fed has to have their feet held to the fire, and the markets will do that. You know, when markets work right, that's what they do. But of course, the central banks have tried to prevent markets from working right.
Yes. So the central banks have tried to prevent the markets from working right, and algorithms have changed the dynamics of things working right, haven't they?
Oh, God, yes. God,
Sure.
God, yes. And you know what, Mike? If you that's just to be patient. Doesn't mean that the opportunities don't arise.
Right.
But you have to let them rise at your price, not their price. Because I see prices, as I say, in my famous wish orders, because I wind up seeing prices that I can't believe at times, because when the algo set everything in motion, you get radical movements.
All right, I'm gonna skedaddle. I'm starving.
Okay.
When you come into town, Ira, when you come into town, let's make sure we get together for lunch, or maybe go golfing if the weather's nice.
Yeah, well,
whatever.
we'll go meet at Johnny Belzano's.
I'm in.
Huh?
I'm in.
Do you know Belzano?
No, I don't.
He's
But I'm in.
He owns a detail shop at
Oh, yeah, 31st Street.
31st Street Fields.
Yeah, I know Johnny. I know Johnny boy.
Yeah, so I told you, I think I told you this story. So a friend of mine, Mike BC told me to go take my car to him because it looked so bad with tree sap.
Yeah.
I'm sitting, I'd never met him, so we're talking, and he goes, hey, I go, hey, and right away we connect, right away. So he says, yeah, okay, here's what it's going to cost you. I said, great. You have to, he says, no problem. And so I duped the guy who did it. The guy did phenomenal work. But we're sitting and talking. So I said, hey, Italian in Bridgeport. Yeah, you must have been friends with Kimmy Pirelli. He says, my sister and Kimmy were best friends. He said, what do you know everybody? I said, well, I have a carpenter, Italian carpenter, who I love, who did all the work in my house, TNT Construction. He said, Tony's my cousin. He calls up. He says, hey, Tone, I'm standing here out in front of the place. I got this guy right here. He says, put him on the phone. And then he's giving me the grand tour of Bridgeport with all the new buildings going on in the $1 million.
Beautiful.
Huh?
It's beautiful.
So he's giving me the tour. And he's driving down the street, and then he speeds up to run over a guy. So he slams on his brakes to prevent hitting him. The guy I see who he looks in the car. He goes, "What the fuck is Ira Harris doing with Belzano?" So Belzano, it was Kenny's.
Kenny's
no,
exit?
really?
Yeah. So we're laughing. So Belzano goes, what the fuck? What do you know? Everybody I know? I said, that's what I'm saying.
See, Kenny.
I got to go see him. I wound up selling him a car.
Which car did you sell him?
I sold him my daughter's, my daughter was getting rid of her Honda Element, which was in really good shape. And he bought it for his son's girlfriend.
I get my car there. I get my car detailed there at least once every couple months.
He's great.
I still get lost.
I tried to send a lot of people to him.
He's a great guy.
I
thought you were talking about a restaurant.
I had such a good time with him. And then we went to Manny's for lunch. When I brought the car to sell him, he drove me. Well, I said, I'll walk to the train station. He said, you can't walk into the T-Units and say, I said, what's the difference? He goes,
Is Manny's open? Did Manny's reopen?
I'm going back. I have no idea. I'm going back to it. I did this I had the car detailed in July of 2019. I remember. Barry Cohen said, what do you not get that car taken care of? But he was great, really. Then he showed me that cheaper one that he put together over at, he's pretty entrepreneurial.
Johnny Boy. Isn't that funny? His name is Johnny Boy.
And he tells me he lives in Western Springs or something.
Uh-huh.
I said, well, I'm surprised anybody here talks to you anymore. When you move out of the hood, it was like when Jerry Considine left. Nobody talked to him.
Considine. That's a name I haven't heard in 20 years.
Oh, God. I haven't seen him in a while. I used to talk to him all the time.
All right, I gotta go. I'll call you later.
All right, thanks.
I'll talk to you later. Have a great day.
Let me know when again.
I will. All right, thanks, Ira. Thanks,
All right,
everybody. Bye, Mike. Talk to you in a bit.
Okay.